oil is really, really interesting as a chart to look at because you've had so much of an extreme either way. And I'm going to reprint this to YouTube, so don't forget if you go underneath my free translator or you can subscribe. So on your monthly, you had these really, really dizzy heights, these extremes of price, and that came around May and June last year. Okay, so traders got squeezed and squeezed and squeezed and squeezed. You actually had your high here. Falls, people think it's okay, and then it just starts again. But the point is, you had a very, very high price after a very, very low price where people were giving away oil, okay, because it was costing them to actually keep it. They didn't want it whatsoever. So what happens is you then rebound and you fall. And you get to this point, and it's just because the demand for oil eases. But then, obviously, you have Middle East tensions that we saw that ram it back up. Okay, so the price just flies up more so in October or as of late, really. It flies right up and it happens very quickly. People start to get very worried. They should. Um, and you get it all the way up here. And then again, the demand eases. And at the moment, what you're seeing is very harsh sentiment pulling it down. That's why people are worried about what to do. Okay, so I would say specifically, in a similar way to what I was just talking about before, where you are now for me personally is not particularly a strong level of price action. Um, I think you'll probably drip lower, more in line with uh, these areas here. Now, I talk about sentiment all the time, and it's just because sentiment or the market mood, what is causing people to buy and sell, is literally what rules things. Like I just said, you had this all the way up here last year, okay? Then you have it all the way down there, and then you have it all the way up here. Okay, so when people start to worry and there's an energy crisis, the price goes up, then it gets flattened as the worries ease, okay, then it goes up again. If there's a war, the same thing happens. If there's a global disease like COVID, the same thing happens. It's completely sentiment driven. The only time you get drastic moves in price is when something drastic happens accordingly in the world. Okay, so that's what's caused the last fall. China is having wavering demand. Okay, and obviously they're a big buyer of oil, and the US has just said that they've got larger inventories and they've produced more oil. So the supply goes up, there's more of it, people don't care about rushing to buy it, the price falls. Okay, now within that will come eventually another change in sentiment, which will say, you know what, perhaps we don't want to sell our oil, we actually want to buy it. And then what will happen is the price will change. And your job as a trader is to be long before that happens. Essentially, that's what anyone ever is trying to do. Um, but like I said, I don't hold much weight in where we are now, and the sentiment is still strong, pulling it down. So be very careful if you're going to buy it. For me personally, I think you'll need to come more in line with these lows until people move in, okay, and they get long in real volume. Um, I would say that, again, you haven't got an enormous bounce from here. There's not much going on, to be honest, in the markets today. But I would rather buy it there. And the reason why also comes if you go on your monthly time frame, okay, you can see that you've really got to move a little bit until you get to areas of significant price action. This being one there, okay, and I would actually say if you're a risk averse trader and you can hold off, you may be better off if you can get to $65, $66 per barrel. That may be ideal, and I would say that's a good risk averse zone if you're looking to buy it. Ultimately, if you do come under that, I would prefer just to spread out my longs. You need to be really careful when you're trading oil because it's so sentiment driven, and your minimum size, even if you're trading a micro lot, okay, it can rack up quickly if you've just got too many of them. It's not like the FX markets where the values of your pips are much less. Okay, if you trade a micro there, you're a lot more safer because you're not going to have a swing in $10 of the price. Okay, maybe, you know, it's a lot different. So I would say if you're going to relong after that, you'll need to do it much lower. But first entries, like I said, if you're a risk averse trader, you can make it in line with this previous area where people went long. I don't think it's particularly amazing. I think it's probably time that oil changed in its value because it has been high for a long time. 2021 now, all the way up and down. But you can see historically what has happened to the price of oil over time. Okay, this one, if you bar the anomaly that was COVID, that's fair enough. 107 to $27 a barrel. Now, the bulk of the move came from 107 to $44 a barrel. Okay, over several months. Okay, so you could have hedged shorted. It happens, is my point. It happens. When you get significant drops in demand, it gets hairy quickly. So just beware that you could go like you did to $27. Just beware that could occur. So if you're going to go long it, don't buy it massively at $66 because if you end up going $40 lower, you're going to get in a lot of trouble. Okay. And you've got, I mean, that did take from July 14 to Feb 16, okay, quite a long time, 1 3/4 years. But nonetheless, that was the fall. Again, you had the financial crisis, is a little bit different here, and different with COVID. But generally, on a move like this, 2014, you can get a large market swing, and especially as you've just had such a swing to the upside. So I would say that I think you'll trickle down. I'd be very dubious about this level. I think you may see a bounce at this point nearer $68, but risk averse longs, investor longs, people who are trading it for the longer term, would probably let it move slightly. If I was going to short this, I really need something like that. That would be very ideal. You've got a very steep downtrend with these pushes up. That would be great for reshorts within this. Okay, and the fact the market sentiment is pulling it down overall, if you look at the long-term market with things easing, that would be the case. Now, if you do find you get another energy crisis, you'll find that it goes all the way up again. So be very, very careful of that. Okay, that can happen. I really wouldn't be shocked if it does. Um, People, if you look at the other side of the world from where I am at least, um, there's a lot of oil production and they control it a lot. So if they say, you know what, we want to ramp the price up, then that is what will occur. So be very careful with that. But I would only short it much, much higher up. Okay, nearer 81.5, $82. And I would only like it long lower. I'm really spacing out my entries with this. Okay, because I think you could get a very significant drift either way. So just be very careful. I'll run over gold as a commodity as well, precious metal. If you go on your daily, again, you're ramping up and up and up. Now we did get one, we got several entries here. I called it short several times up here. Okay, I did that. I said that many times. I called it long there. Okay, you get the picture. We made many trades. I called it long there. That was really good for a tech zone as well, because a lot like your DXY, you're coming to strong previous levels of support, a handful mixture, this amalgamation moving averages. It was a really great tech zone. Okay, low stock oscillator. It was telling you within this up move, positive market sentiment, there is a dip. What's your time to get long? So if you did that, well done. I would close or at least lock in gains. If you go to your weekly though, okay, you can see that the push from this level is immediately higher. This is why I say if the market falls, don't expect it just to go in one line when you say so and how you want, just pull you all the way down there. Don't do that, okay, because many times that's not what's going to occur. And the fact that you're ramming up straight back into here and you didn't go that way tells you there's strong long side bias. So, as I said, I said, don't be surprised if it comes above those highs. I would, again, just like oil, okay, because markets are turning a lot at the moment with all the change in sentiment. I would just say if you get up here, I would get it short. I'd be very wary of trading it here. I think you've got a light short entry. Okay, at this point, But like I said, I think you'll get higher ultimately. Well, I don't think particularly you'll get higher. I think if you do get higher, I would rather short up at this point. Again, I'm identifying risk averse zones for long term traders. That fits the mass market on TradingView. I think most people are looking to hold entries for a longer term and swing trade. So at the moment, it is a light short, in my opinion at least. And if it goes significantly higher, I wouldn't be surprised if you could DCA slash further scaling. Okay, that would deliver more entries to the upside. Don't go crazy, but just bear in mind that you're at the previous high. And if you look on your monthly, the previous high has fallen several times. The most local fall is a bit different. And I said as well, and just bear this in mind, I wouldn't be shocked whatsoever, and I think it's inevitable in some ways, that you'll break above this high. Okay, so again, don't come up here to $2,050 and say, you know what, I'm going to go crazy. I'm selling everything. I'm selling the house. You say sorry to your wife or your husband and say, I've listed it all and I'm going to sell gold in everything we've got. Don't do that because it's inevitable. You hit the ceiling so many times and it breaks. Okay? It happens. So be very careful. Light entries. If you don't want to short it now, wait and wait and wait. If you don't get the entry, it's not the end of the world. Okay, trade all these lovely other assets, all these FX pairs, these indice markets, oil, everything. You can trade it instead of obsessing over. Okay, so just be wary of that. It will help a lot. That's gold. Um, so now we'll go over indices. I'll do US indexes, the UK, and things like that. I'm going to relist this as I said, so don't forget to get my free training underneath this